What's going on, family? Welcome back to the channel. Today's video is from my last Ask Your Coach session where I broke down how you can leverage creative financing to scale your real estate portfolio. I've used creative financing from buying a single family home all the way up to 24 units with 100% owner financing. By the way, I'm Johnny Lyon, the military CEO, Air Force veteran turned full-time real estate investor. My mission is to help veterans and high-income earners build wealth and diversify their portfolios and build passive income through real estate. Make sure you comment with any questions on today's video. Give it a thumbs up, like, and subscribe to the channel. Let's jump into today's content. Let's go. In the interest rate environment that we're in right now, because I would tell you, the more that everybody talk about, everybody get wrapped around the axle when it comes to interest rates. And I can't buy because interest rates are high. I'm like, okay, all right, cool. Let me know how that works out for you in 2 or 3 years while rates are still going to be high. You got to evolve and you got to have strategy. And so number one today, we're going to talk about creative financing in a high interest market. It is extremely important to understand that you need to have different tools in your toolbox for different market cycles when it comes to real estate investing. So subject twos, where you're able to take over the existing debt that's on the property, you're able to assume that mortgage. And now guess what? You take in that mortgage, and if they bought in the last couple of years, then you could have a 2.5%, 3%, 4% mortgage that you're taking over, which is great. It allows you to pay down build equity, pay down the principal a lot faster. And guess what? This debt is not in your personal name. So subject to is a great strategy. It works a lot when you start looking at, our clients that when they're working with people in pre-foreclosure is a great strategy because you're able to bring the mortgage back out of arrears and bring it back into good standing. And from there, you're able to make the payments and take over control of it. And from there, you have multiple strategies that you can use to implement to move the deal, whether you want to keep it as a rental or you want to just go in and do a complete sale. You have the option. Seller financing, one near dear to my heart. We're in the process right now of wrapping up our 84 unit portfolio down in Montgomery, Alabama, that we had 3 years of 100% owner financing on 2 of the complexes that make up the 4 total in the portfolio there. And we're in the process of refinancing those, but 100% seller financing on the 24 unit and a 20 unit. So yes, you can do 100% financing on multifamily as well as single family. And we've done it from single family duplexes. And most recently, in 2022, 2023, with substantially larger multifamily deals, you can do seller financing where guess what? The seller becomes the bank and they finance it. And guess what? All my seller financing transactions that I've done over the last 15, 16 years, guess what? Not once has a seller asked me, hey, let me pull your credit report. Or, hey, go bring me your latest last 2 months bank statements. None of that. And the process is essentially now the bank is the seller. They're financing your loan. And if you have a great relationship, which when you're going through any transaction in real estate, relationships, you should be going and striving to build a relationship with your seller, their agent, if it's an agent involved, or with your bank. There's so many relationships that go into each and every transaction. But seller financing is one that you can really take advantage of in this high interest rate environment that we're in right now. Because guess what? If a seller is motivated, they want to sell, and they don't, and they can in a position where they can be the bank, you're their best friend. Because guess what? Now if they sell a finance, they're not receiving a lump sum that they have to go pay capital gains taxes on. So you're saving them on taxes. And guess what? Now they're still getting recurring income coming in from your monthly payments that you're giving them without the headache of being a landlord. And so seller financing is a win for everyone. And that's what I really love, because that when you look at the leverage that now you can go in and you could be 100% owner of a 24 unit that you did, because guess what? You don't need to raise equity. You don't need to bring private investors into your deal. So it gives you flexibility to build wealth at a really fast level with that. Wrap mortgages is another strategy where you go in and you wrap the existing debt and you bring in another level of debt, or you wrap the mortgage to go. It's a little bit more exotic, a little bit more higher level with that. But that is another option that you can look at using, especially kind of with subject to where you go in and you can do a wrap mortgage where you have the baseline financing, but then you may go in and bring in another owner that wants to rent to own. And so you go and give them another mortgage on top of the debt that's tied to the property, where you give them terms where they do a lump sum down payment and then they make payments over extended amount of time. So you can wrap the mortgage. So that's always an option. Real world deal structures, like there is nothing that beats doing real live deals. Like getting out here, understanding how to put a deal together, because the only thing you're limited by is your creativity. And so I'll say that again. The only thing that you're limited by when it comes to putting transactions together is your creativity. Because if you have the number one ingredient, a motivated seller, then guess what? If you can create a win-win situation, guess what? You're going to do extremely well. And so that's one of the things that I want to encourage you is to kind of open your aperture, learn these different strategies we're talking about right now, but looking at different structures of how previous deals have been done. I just talked about, in regards to the 24 and 20 unit that we bought with those complexes, that we had a 2 year base term with a 1 year extension option. The underlying interest rate was 7%, and it goes up additional 1% if we execute the option to go into that third year. So it goes from 7 to 8%, and it's interest only. And so, guess what? With these properties, we had over $300 upside because the rents were lower than the market rent. And so, that was the opportunity for us over the next 2 to 3 years to force appreciation, which is in multifamily, it increases the value. And so, that's the thing. But there's so many different ways that you can go through and structure these deals where you can limit the payments that are out of pocket up front. So you can do interest only, where you're not making principal and interest payments. Or, hey, if you're not really looking at a cash flow play, it's like, hey, we could look at, we're fine with playing principal and interest. And a lot of times you create the interest rate that you want, because guess what? If you lead the conversation with the seller, that you could come in and say, hey, how about I just pay you $1,500 a month towards the principal? And boom, and they're like, hey, that's a good return. I'm fine with that. And now you hadn't even talked about interest rate, but you're paying down 1,500 that's going 100% toward principal, no interest. So it's all about how you present the terms and how the conversation goes, and making sure that above board that you're clear. You're clear on the terms. You lay it out in the contract. Your attorney, the closing team, they have everything in place, and you get it documented, and you're off to the races and good to go. And the big thing that I talked about a little bit is just creating win-win offers. And so that's one of the things when it comes to negotiating deals that is critical, that you listen more than you talk up front, to understand the seller situation that they're in and the problem that they're trying to solve. So guess what? You can be their knight in shining armor that's coming with the solution, because you listen, you understood the problem, and to go through. And so the big thing that kind of with you guys that are kind of maybe newbies and looking to get into doing more transactions, that there's a lot more to the terms than just the price. So we're talking about the interest. We already, in the scenario I gave you, we talked about the interest rate. We talked about extensions, where you can push the contract out the terms longer on the pay period. But then also you're able to increase interest rates. If you execute a term, you can do interest only, or you can do principal and interest. And so you have multiple options, that levers within there that you can pull to make this a win-win deal for both you and the seller.